once we are going live, we'll shift the listening. Okay. Right.
Sir, since it is 3 p.m., I think we can just start with the introduction. Others can join. What do you say?
Okay.
Yeah, ma'am, definitely. So we have 18 downloaded already.
Yeah, we can start.
మనం ఎట్టి పరిస్థితుల్లో ఇవి ఆన్ చేయకూడదు. చూడు లైవ్ స్ట్రీమ్ వస్తుంది, ఈ లింక్ యూస్ చేసుకుంటారు.
So good afternoon to one and all. So I'm Dr. Hafiz Basha, Incubation Manager of Usmania Technology Business Incubator, Usmania University. First of all, I thank Madam Anjali Manda for accepting our invitation to deliver a Tech Talk. So Tech Talk series is organized twice a month, that is every alternate Wednesday. And we had a few sessions conducted earlier on various other topics. And the reason why we choose this time this topic is, like many student innovators, startups, they are now in the process of preparing their financial plans. So that is where we needed support from experts. Once again, thank you, ma'am, for being with us today. So Anjali madam is the founder of a company called Moneymati, and madam has done her bachelor's degree in science, that is chemistry, from Sambalpur University, and PGTM in finance from Xavier Institute of Management, Bhubaneswar. And madam has been active in consulting and business development. She has supported a lot of startups, incubators, and government organizations. And madam has served in so many committees. So with her experience and expertise, I am sure our students are learning how to prepare their financial plans. So with this, I request Madam Anjali to please get started.
Thank you,
Inquiry form.
Dr. Hafiz Basha, sir. It was a very detailed introduction you gave. I don't know how much I'll be able to do justice. However, with all my practical knowledge and my own startup troubles and finally starting my startup, I want to share my ideas with you. So students, can you all hear me? Sir, am I being audible and are you seeing my screen?
Yes, ma'am.
Okay. So good afternoon all of you enthusiastic students. The topic for today's presentation is how to make a financial plan for a student startup. Now what happens is when an enthusiastic team of students come up with a business idea, they generally are very well aware of what is the technology behind their product development. Whether it is cloud computing, whether it is artificial intelligence or smart manufacturing or e-commerce platform or community-based portal or cloud kitchen, whatever is their idea, even fintech. So a lot of emerging ideas and technologies, blockchain, they are coming up in every business and other sectors. So about the technology part, they are very good. And go-to-market strategy is very interesting and they would have already built a strategy. But when it comes to understanding the financial metrics of their company, they are a little hesitant. So in this topic, let us discuss how to simplify that process. So let us see what we'll cover today. We'll quickly see who makes a good entrepreneur. We'll see what are the different business entities, because each different entity will have a different cost and scalability structure for their business. Then we'll see what is a business plan and its importance. then a small flow chart to see what are all the steps that you go through from your ideation stage till the go to market stage. Then what is a financial plan and why do we need one? And then we bring the idea of the business model. It has helped me a lot in my business. So how to use a business model to make a business plan, the steps to make a business plan, and terminologies like sales, profit, operating expense, balance sheet item, how to calculate project cost, we'll see that. Then we'll see some financial ratios like what is your profitability, when will you break even, all those things. Okay, so can you see my slide, students?
Yes.
Okay, great, thank you. So what makes a good entrepreneur? You already are in the process of being one, so you'll agree with me. They are generally highly energetic and they have a great motivation to achieve. They are ready to take calculated, informed risk. They are comfortable with uncertainties. Today there is no cushy salary for them. There could be months where they make zero income, but they know that tomorrow they are going to scale up. So they'll know to live with uncertainties and navigate the world of business. They are independent minded. They are constantly exploring for opportunities, because good and smart business becomes viable from the first year if you know what are the gaps in the market and the needs of the customers. So they are future oriented. They'll always keep an idea of what is the new technology thing that is helpful and with affordability. They are hardworking. They work with the end result in mind. They are flexible and they're willing to learn from mistakes. Whenever you do a prototype and you try to do a pilot, and customers come back and say that this is the problem I'm facing, it is slow in loading, the cost is a little high, what are the benefits I can't make out. So you should tweak your ideas when you listen to the customers. So don't forget, the most important thing is keeping the customer's need in mind. So what is a business? It's an organization or an entity that is engaged in either commercial, industrial or professional activity. Now businesses can be for profit or not for profit. So profitable businesses are Reliance, Airtel, Wipro, Amazon. Not for profit business work with an idea to do charity or to bring about a social benefit. So the examples are Child Relief NU, Isha Foundation, Bill and Melinda Gates Foundation, United Nations Development Program. All these are not for profit organizations. But the thing is, a business is a going concern, means it is built with an intention to last. You don't build a business which you think that you will close it in 6 months. You build a business that you want to make it better and better and better, so that you, then your team, then the next generation also takes it, and it keeps on going on. So what are the different types of business entities? You already know this, quickly I'm covering. Depending on the number of people and the complexities involved, you can start with sole proprietor, become a one person company, then do partnership, then limited liability partnership, then private company, then a public company which gets listed. So you can just Google this, what is the difference. So when you want to go and register, depending on how many people are there in the team and whether you want to limit your liability, you go for LLP. If you're that is a very good thing. And as you grow in size, you can even think of private company, and hopefully one day you can also list on the stock exchange. So what are the different types of business entities in terms of the activities they do? Manufacturing, service oriented, like bank, training organization, educational institution, service oriented. A wholesaling, you buy in bulk and you sell to the other resellers. So it is wholesaling. Retail outlet, what we go and see like this Heritage or all these supermarkets, malls, all these are actually merchandising retail outlets, examples. So as per the definition by DPIIT, which is slightly tweaked, now any startup up to a period of 10 years from the date of incorporation, if its turnover is less than 100 crore, it is a startup. So government has given this concession. What is a business plan? In its simple form, a business plan is a document which serves as a roadmap wherein you can outline your goals and objectives and mission, and write a
Vinandi,
detailed
business
plan
plan చెప్తుంది.
in terms of
What is business plan,
operationalizing
how it
it
is
and
done.
marketing it and financial plan so that you can achieve those goals. So now the question is, somebody had asked this, some student had asked this. It is actually a business plan is a document. So what all will go in the business plan document? You will mention all the team members and the roles they play along with their brief introduction of their skills and education. Then you will write what is your business about. Obviously it will have a name, you have registered it, then what it produces or manufactures, what service it gives, its mission, vision you will give in brief. Then you will outline what are the 3 or 4 major problems that you are willing to tackle and what are the solution that you're proposing. Then you will try to understand in depth what is the market size, who are your customers, how they are buying, where they are buying, how much is their spending strategy, what are their needs, from which region they are buying. All those detailed market analysis you need to do. Then of course you will see what is your competitor selling and at what price and how is he going and selling. You need to study that. So this is a brief survey you need to do and also document it. Then you will develop your financial plan, which we'll discuss today, and then you will also mention all your milestones. So and so date of incorporation, so and so date patent taken, so and so date prototype developed and product launch. So this is a milestone you will keep in mind. It really helps when you want to project your growth. Also it is good for you to understand what you have achieved. So why do we need a business plan? One is it guides you like a map and it makes your process systematic so that you can set up systems in place. So it is a step-by-step way in which you will know what I should do next, next step what I should take in my business. Also, when you make a good financial and a good business plan, you will be able to attract proper investors, whether it is bankers, whether it is a venture capitalist. They will ask you pointed questions, and if you have written it down and thought over it, then you will be able to present a good picture of your business. If you have seen Shark Tank, you will understand what I mean. You mark my words, Shark Tank will also go local. Once in few months or in 1 or 2 years, we might get Shark Tank even in Telugu. So anyway, Shark Tank India has shown how businesses are evaluated and why you must be so systematic about what you are doing. Okay, the flow chart, very simple flow chart only I have put. First, you need to think problem. Then only you will get solution. So there are so many problems in the world. I want a cheap smartphone. I want a good headset. I want clean water. Okay. I want to bring down the temperature of my area. I want to do rainwater harvesting. And it's so many problems, 101 problems are there in our day-to-day lives. You know, petrol has become so costly. Is there any other way to commute? So you choose what problem you can tackle based on your skill potential. And in that sector and area, you write down the major problems. You find out what solutions you can do. That's how your company is formed. When you write your mission, vision and goals, I'll tell you what it is in the next slide. Then you do an initial market research to develop your product, and then you operationalize your plan and build your finance plan. So Zeleno is one company which is doing reverse vending machine. It is having 2 types of machines. One is that tin and cans which are thrown, it is vending it and recycling it, and another is plastic waste, and third is paper waste. So it is called reverse vending machine. So see how they have written this. You can go and even Google. They have presented their team so well. Each person, what is his or her role and what is the background. So you see if the person has got manufacturing experience, then he becomes the chief operating officer. If a person has got a technological computer science background, he becomes the chief technology officer. And the main person who has brought everybody together becomes the chief executive officer. So this way, with diverse skills, complementary skills, you must form a team. And this is so important. It's just not to show. When you form a team with different skills, you have division of labors built in. Everybody need not do all the work. It will be divided. There will be efficiency. Then you will also bring the cost down because you don't have to put everything together. by 3 your investment value will get divided. This is one way in which you can reduce your original cost of investment by by taking good partners on board. That is one thing. The other thing is, when a single person is running the show, if something happens to the person, or he loses the steam, or he becomes less energetic, then the business stops. But if there are others in the team, they will come up with ideas and they will take it forward. So I always encourage that there should be team formation. Now, about the goal, vision and mission. First thing you should write is vision, means what you aspire to achieve. Say from 5 years, 10 years from now, what you want to become, that is vision statement. Mission is what you are doing, what you're going to do. I'm going to do reverse vending machine in a very sophisticated way, which is very less costly. It will encourage, we will give rewards. That is the mission. Goal, how are you going to achieve the mission is the goal. They are going to use not only the company resources but engage all citizens. They will do citizens network program in which citizens get involved. So goal is the way in which you will achieve your vision and mission. So next comes, what is a financial planning? It is a document in which all your company's financial data you will compute, which is your sales, your profit and loss, your balance sheet, your cash flow statement, and your financial metrics. So next question is why it is needed? So that you will assess what is your current financial situation, means what is money, how much money you already have put, how much you have in your pocket, that you need to know. Then you need to know 2 years, 3 years, 4 years, 5 years from now projections, how much you will achieve. Okay, then you will also need to understand, for doing this, starting this project, how much finances I need, what all assets I need to buy, and how much money I need in terms of my investment and borrowings. So debt and equity. So one way in which I developed my business, my financial plan, was using the business model. So I'll quickly explain to you. It is interesting only what is a business model. It is a business model is a plan for successful operation of your business, because it identifies what are your sources of revenue, who are your customers, what all products from where you will sell, and details of financing. Now, why business models are very useful is because they tell the story of how enterprises are started and grow and they work. So Peter Drucker told that a business model will answer very important questions like, who is your customer? What does the customer value? It will also answer fundamental questions which every manager asks. Will my business make money? What is the economic logic by which we can deliver money? I mean, we can deliver value, that is, we can get money, but at an appropriate cost. So all these questions you can get from your business model. So when you Google, you will find out Alexander Oswalder is the person who created the 9-step business model canvas. There's a small video also, you can go back and see it. So what are the 9 steps? You please pay attention. I have written down the answer to each of this and got my answer. So first thing is, know who your customer is. Know your customer segment, means what all segments, what do they do, you should know their customer behavior. Then value proposition, what will you offer to them which is different from others, okay? Then how will you reach the customer? Will you go via the shop or franchisee model? You will have your own shop, or you will go via a mobile van in which you will reach the customer. What are the various points in which you come in contact with the customer? That is customer relationship, how you will manage. What are all the revenue streams, from which all places income will come? How will you earn the income from your customer? For earning the income, what are all the people who will do the work for you, materials, then the power, then the office space, all those things you have to list down. And for doing these resources, first you will write down the key activities, then you will know the key resources, and you will write down who are your partners, who are your vendors, who will help you in your business, isn't it? And then you will prepare the cost sheet. It is very important, cost sheet. So This is again a very good slide done by a consulting firm Bain and Company. They are saying, how do you explore what value you can give to your customer? So you can give functional value. How? Your appliance save time. It simplifies the process. It helps you make money. It reduces your risk. It organizes the data. These kind of advantages, if you give, you're a functional. Emotional means it helps you, release your anxiety. It makes you look beautiful, or it improves you. So all are emotional. Life changing means it provides hope. If you have any mental illness, it gives you a motivation. So if a person who's doing life coach is doing a life changing business, then there are social impact business. They alleviate poverty of the people, give them livelihoods. So these are all the different ways in which you can give value, and you find out how you are going to give value and write down your advantages, product advantages. Okay. So now we'll take the example of Airbnb. Recently, Airbnb was in news. It told that forever its employees need not come to office. You can always perpetually work from home. It's a very smart idea that shows that the business is adapting itself to the changing times. So Airbnb is an online marketplace where people can list the places to stay. People can find and rent accommodation. Why it became famous? Because all over the world, travelers who don't have to spend too much money are getting cheap accommodation with the local, ambience and homestay kind of a experience. And they have now come up with so many permutation combination that quick office goers, tourists, everybody is benefiting from Airbnb. So this is the business model of Airbnb. So just I'm touching some of the points. Who are their customer segments? Price conscious travelers, hosts who want to rent their place, travelers who are looking for local experience. And what are their revenue streams? They are going to earn commission from homeowners. They are also going to earn commission from rent aggregators. So, like No Broker or Magic Bricks, these companies, whenever they list any Airbnb will charge them also commission. So this way they have listed all value propositions and key resources. See, their key partners are bloggers, photographers, legal institutions, insurance companies, and homeowners, obviously. And what is the cost structure? Main thing they're saying that we need to develop a platform, isn't it, to showcase our business. We need good community management, people who will grow the community, and we need a good marketing team and also a sales support team, marketing and sales support team to bring to build the brand value. So these are all the cost structures, and inside that we can understand what will be the items. Okay. This is an example of one business which is providing investment advice to women. So what are the problems? How do women manage money? How to manage their debt? How to build their wealth? Where to invest their money safely? How to calculate net worth? How to do tax planning? How to build a safe portfolio? All these problems women were facing, and we realized after research that 49% of women don't have idea about investing. 32% say that they don't have enough money to invest like this. So to solve these problems, we thought that working professionals, single women parents, about to retire employees, and even SMEs and traders who want to park their idle money, we thought that there could be customers, and even homemakers who want to manage money tax efficiently. So we use the addressable market size. How many women in India, and how many of them have Demat accounts? It has now actually reached 7 crore Demat account holders are there. So even if 50 lakh women are holding Demat account, if even each is willing to pay 10,000 rupees for doing financial planning, then the potential market size is 100 crores. This is the way in which you can do secondary data research to get the idea of how big your market is. If your market is big, only then you can go in a niche way to address the market. So what products they thought? Some e-learning courses, so that to expose the main philosophy was learn, read, do. So learning products, reading products, and doing products, smart baskets. For each goal they have made, basket of investments, listing all the good mutual funds, small cases, equities based on the risk profile. And each of these products is having a sale value. A training will have course fee, magazine will have a per unit price, books will have like this. And for financial planning comprehensive plan, they were charging rupees 10,000, and for one goal planning they're charging rupees 2,500. So like this they have made their products. So now we come to the main part, is how do we compute our income statement. So for that you need to understand sales, gross profit and net profit. So I am making it easy for you. You take you use a funnel, like the funnel. You put in the sales and minus the cost of goods sold, you will get your gross profit. So from sales, if you remove cost of goods sold, you will get at the gross level gross profit. Then from that you subtract all the operating charges, you will get the operating income. From the operating income, you remove tax and other indirect charges, you will income of net. Okay. So from to net profit to remove, you just think about that. Now we will understand what are all the expenses. I have mentioned COGS, cost of goods sold. It is very easy. Cost of goods sold is nothing but how much money you have spent to produce or manufacture your goods. That is cost of goods sold. And what is operating expenses? Once your good is manufactured and it has come from the go down to the sales outlet, then from the sales outlet to go to the customer, you need to do certain processes, right? So to run the company day to day and to help to sell the product, what are all the expenses, the business expenses, that is called the operating expenses. Now let us understand what is cost of goods sold, what all elements will come in. Obviously, because it is the cost of manufacturing the goods to be sold, it will have obviously raw material cost, labor cost, overheads. And so you will keep valuing your inventory in terms of whatever inventory is there, plus what you have purchased, minus what is, actually left, ending level. So in that way, you will understand how much you have actually sold, isn't it? So beginning plus purchase minus this you value it, you will come to cost of goods. The manufacturing company only you need to bother about COGS. You can sit with your chartered accountant. Once you understand sheet, you will easily come to know in the back of your mind how much labor, how much material, how much power has gone into building the unit. And you will divide it by unit, you will get per unit cost, or you can do the per unit cost. Now we come to understanding operating expenses. So for selling your product from the office to the customer, you need lot of things. You need to pay rent, you need to pay property tax. You have different licenses for running the shop, then rent for the place, people's salary you have to pay, then any repairs and maintenance. So all this can be classified selling, administrative and general expenses. For running the show, what all people and what all taxes you have to pay, that is your operating expense. Okay. So now you have understood. Now the thing is, there are three types of business. If it's manufacturing, you will have COGS and operating. Whereas if you are a lease company, then you will not have COGS. You will only have rental and your inventory expenses and expenses for your selling staff, retail staff. If you are a service-oriented company, then you need to have manpower for billing and collection, manpower to give the service, and also computer network to do the billing. That's all, isn't it? So as per the category of your business, your cost items will change. Now there are 5 steps to get your financial plan. In the first step, you will calculate your sales revenue. How much revenue you will get, I will tell you the logic in which you will calculate that. It is very simple. Okay. Once you get the sales revenue, you will subtract the expenses of your manufacturing to get gross profit. From gross profit, you will subtract operating expenses and get your net profit. So the statement in which you get your net profit is called the profit and loss account, because it shows your income and it shows all your expenses also, isn't it? So you get your profit and loss account. After doing your profit and loss account, that profit is charged to your equity. So you will understand what is the your static position, financial strength of your company with your balance sheet. You will understand how much equity investment is there, how much liabilities are there, and what are all your current assets and fixed assets. You will see that estimate will give you your balance sheet estimate. Then you will do one by one the costing that is required for you to set up this business. You will do the costing of that. And suppose you get suppose you come to know that you need 12 lakhs to set up the business. Then next question is, out of 12 lakhs, how much you will put out of your pocket, you partners? That becomes equity, and the rest becomes debt. The rest can come either from a grant, it can come from a bank borrowing. So if it is a bank borrowing, means it becomes debt. Don't worry, I will show for each of the things I have told you, I will give you an illustration. So this is the financial projection of a company called Samriddhi. So they are doing training, they're selling ebooks, and they're doing financial planning. Okay. So first year they are making sale of 3,50,000. Second year the sale is 8,40,000. Third year the sale goes to 67,20,000. So first thing you have to do sales projection, and please remember it is projection only. So for doing the sale projection, you need to keep certain assumption in mind. It's very interesting and logical. How did they get this figure? Now see what happened. I was talking to the person. He said, on a weekly basis, I'm getting 2 customers who are coming for financial planning. That means per week 2 months. Per month 8 means a year, 8 into 12, 96. So I have put 100 participants for training, 100 participants for consulting. And he estimated that when his book sold, when he wrote a book and he sold, in the first 6 months, he was able to sell 200. So we have taken 200 books sold. So when you get estimate of your per day competitor, and you go and estimate ki per day how many people are coming in, how much of goods is being sold, then you can do weekly. From weekly you can do monthly. From monthly you can extrapolate it to yearly. This is how you will do your extrapolation for sales. Then you come to the understanding the expenses. So here also there is a shortcut formula. This is only a thumb rule. I'll show you. For each industry, when you do a cost analysis, there's a lot of research which is done for Indian companies. Generally, up to 30% is the employee costs, 10% is other operating costs, and 5% is marketing and selling costs. So, in that way, you will be able to compute a ballpark or estimate your operating expenses. So, you see, employee costs, I have taken 30% of 7 lakh. Again, operating expenses, 10% of 7 lakh means on the gross revenue, you are giving a certain percentage to each of these operating expenses, and therefore you are getting in the total operating cost. 30 plus 10 plus 5 make it 45%, isn't it? So if 45% is the total expense, so 55% will be your profit margin. So that is how it is computed. Net profit margin is the, a profit divided by the total sales into 100, the percentage. So this is very good data you're getting through many websites like Startup India. A lot of other research sites are there. The name I'm not getting, research-based sites, which have done cost analysis as per the industry. So suppose you are a technology industry, you can go and either check the annual sheet of the top companies, or you can go and check this IBEF site. It will show you the detailed cost analysis. So you can come to know an estimate of what will be your cost. Once you know the cost, you will also know your profit margin. Understood? Yes, students, are you there with me?
Yes, ma'am.
Yes, ma'am.
Okay.
Yes, ma'am.
Okay, great. So you understood this is how your profit margin. Now the thing, intelligent thing which you businessmen will think about is profit margin will change, isn't it? When input costs go up, your expenses go up, your margins will come down. You think it will always be at 55%? No. Just see, because of the Ukraine-Russia war, even though we didn't anticipate, everything has gone up by minimum 20%. So 45 rupees has gone up by 20% means it has become 54 rupees, which means your profit has come down from 55 to 46 rupees. There is a 7% decline due to a 20% increase in each of the inputs. Each of the expense has increased by 20%. It has dented your net profit margin by 7%. So this is called sensitivity analysis. What happens if if you increase the selling price and if you are increasing the number of units sold? It is a positive analysis. And then you can do a sensitivity analysis on the downward risk. What happens if input costs go up? How much will be my margins affected? This way you can do Excel sheet analysis. And the good news, what I'm going to tell you all, is all this can be done by software. I will share this presentation to Hafiz sir, and he will. You can use the resources from where you can do it even via software. But why I'm telling you all this so much in detail is you should know the logic. Though the software will ask you certain questions and tell you, you should have a grip of every aspect of the cost and business. Then only you will be able to make money. Next, you need to understand how do you compute the project cost. So there will be an item sheet given. Whatever is relevant, you keep filling. In the case of this financial planner Samriddhi, their main cost was their application cost. How they found out? They took a quotation from 3 or 4 vendors, and for doing a AI based robo advisory, they told minimum charges were 10 lakhs. Then laptop for the owner or person who's operating, I have put the laptop charges. Other office equipment for setting up the office. He's basically running from a small office only. Then preliminary expenses, because from the regulator you need to get the license, that charges. And for at least for 1 year, if he wants to pay salary to any administrative assistant, how much? So that is your working capital need. So that becomes the total project cost, isn't it? How do you calculate your working capital? You need to understand, bank or anyone will not give you working capital. It has to come out from your pocket. For running your business, what all charges you need to do on a monthly basis, for 12 months at least you should have. At least for 6 months you should have that much money. Then only you can start the business. So suppose it came to 13.75. Now out of 13.75, he said, I will put the working capital 1 lakh. I will also fund my laptop and office. So I will put 2.5 lakh. The rest, 11.25, what do I do? How do I get the funding? So he can approach the bank. They will ask for generally collateral. He has got license fee. He can show that he has already got customers who have paid him money. So these kind of invoices he can do to get the trust of the bank and go for bank funding. It is not a very big amount. Otherwise, he can try for if there is any scheme that not actually subsidy from government, if there is any grant and aid scheme, because nowadays government of India through various different incubators is starting these awards, hackathons and competitions where the top ideas which can be immediately deployed are scalable, are making profit, can get grant in aid. And this at least 10 lakhs is quite okay, is reasonable to get grant in aid. And when you ask for grant in aid, you should be able to say what I'll put my money for. So you will say that laptop and working capital I am funding, and for doing my financial software and for doing my initial expenses, I need 11.25. Okay, that is how you will project it. Now the next question that comes in anybody's mind is, when will the business break even? Matlab, whatever fixed cost you have put, will I be able to recover that? That is break even. So it's very interesting. Again, you should understand what is the fixed charge of running a company. Smart businessmen nowadays don't keep office. Why? Because they don't want to pay fixed rent. what will be the fixed charge? Example, if you are keeping an office assistant, a person, and giving him 10,000 or 15,000 salary and paying 20,000 per month, means straight away 30,000 fixed cost are hai. So just imagine if 1,000 is your fixed charge every month and you are manufacturing 200 t-shirt, means you are only having per unit fixed cost of 5 rupees. If it is 400 t-shirts you're manufacturing and for the same rent and same person you're paying the charge, it's coming down to 2.5 rupees. And 600 t-shirt you're able to manufacture with that same office and same person in 1.67. That means though the fixed charge is same, as in when your productivity level and your goes up, more units you manufacture, your fixed cost per unit comes down. Okay. The other thing you need to know is variable cost. Variable cost, you already know that how much labor you put, how much material you put, how much power you have put. So per unit, you know, suppose it is 15 paisa. Now, if you manufacture 2,000, means 2,000 into 15 paisa, 300 rupees will be your charge. It will be 600 for 4,000. That means variable costs keep going up when the production level goes up, whereas in fixed cost it is opposite. When the production level goes up, your fixed costs keep coming down. So you should keep this in mind. Now there is a formula to understand when you will break even. Fixed cost divided by the contribution. What is contribution? Selling price per unit minus variable cost per unit. So here you see they have 2 or 3 different products, but I'm making it easy for you. Suppose the selling price per unit is 14,040 rupees, and the variable cost per unit is 350 units. Then you can apply the formula by doing total fixed cost 2,40,000. That employee charge only I have taken as fixed cost. Okay, so 2,40,000 divided by the contribution, I have got the answer that 221 or 220 units if he sells, he breaks even. That means if he is able to sell 220 units, he is able to cover all his fixed costs. Whatever he sells over and above 220 unit will be giving him profit. So that is what you need to do. Again, to find out the break even in rupees, you have to do fixed cost divided by the contribution margin. Means you have to just take the percentage. That means you'll come to know how many rupees. So after you make 3 lakh worth of sales only, you will be able to break even. Why do we do break even? If your break even point is less, then as a businessman, you know that you will be able to do your business profitability fast, isn't it? Imagine if you take the whole year to do 220, then it's not a viable business. If you're able to do in 3 or 4 months, you have finished your 220 sales, then whatever comes extra will add to your profit. So you will be at ease. So break-even analysis, the sooner you break even, the more viable the business is. So this is how you will check that. Then debt to equity ratio. Suppose in 13.75, you have put 5 lakhs. 2 partners came, each of you put 2.5, 5 lakhs you have contributed, and 8 lakh 75 bank has given. So the 8 lakh 75 becomes the debt, and you have to divide it by equity. So you will come to know what is the debt equity ratio. Generally, debt equity ratio shouldn't be very high. Means because the interest cost which will come, you should be able to service that with whatever earnings you have in the initial phases. So we say that more equity and less debt is a very valuable idea when you do a startup. So balance sheet items, whatever is your cash and whatever you have done invoice, and you have invoiced your customer and they have paid advances, so you have accounts receivable. All that will come in your current assets. So like this, you have current liabilities. You have to pay your employees, and all those other expenses will come in your liabilities. And in shareholder equity, what I showed you, like 5 lakhs, that is your equity capital. Retained earnings, first year, end of first year only you will come to know your profit. That will become your retained earnings. And then your profit and your balance sheet is ready. So balance sheet is nothing. There is a fixed number items. There is a format. I will share the format. You can also do it via software. It is very easy and self-explanatory. All your loan items, term loan items will come in liabilities. All your cash and whatever bills that you will get from your customer will come in current asset, and the rest will come in your equity. So what is the formula? Equity plus liability is equal to asset. Asset is equal to equity plus liability. So that is the formula in which you work on your balance sheet. Now cash flow statement. Whatever is your profit is not your cash in hand. You understand that? Yes? Whatever profit you earn is not your cash in hand. Why? Because there are so many items. So you need to understand what are all the sources from which you have the cash in your hand. Cash can come from your business. Cash can come when you sell your assets, so it is investing. Cash can also come when you are taking the loan, so it is from financing activities. So what are the three sources of cash flow that is computed via the cash flow statement? Basically, it shows how much cash the company has and from what source. Typically, for a good business, you will want high operating cash flow. Whatever you are selling is a one-off. Whatever you are taking as a loan and getting money, that is a one-off. But to sustain your business year after years, you should have a healthy cash flow from operations. Okay? Which means that you should be able to bring more net income. Of course, depreciation is something that you have to do for. Then you should be able to reduce your inventories. Obviously, you should be able to sell more, and you should be also able to not accrue too much of accounts payables. A healthy cash situation.
Platinum movena.
What are the risks to your financial plan? So you have built a nice financial plan and you know that you are making your money in the first year itself. But there could be cost escalation due to geopolitical issues like what happened in Ukraine and Sri Lanka. There could be high inflation which will increase your EMI also. There could be supply constraints. Many semiconductors and automakers have got hit because they didn't get semiconductors. So I'm giving an example. Revenue may not meet your expectation because market condition. For example, government suddenly banned wheat export and sugar export. Imagine a company, 35% of its revenue is coming from export, and that has become zero. Means your revenue will not meet the year's target, isn't it? Then there could be business regulation that comes in. GST's value, you become liable for GST. Government regulates you. So many things can happen. Also, you should be also having some alternate sources of funding, tapping the P2P lending platforms or venture capitalists. Suppose bank says no to you. And the next important thing is, if you know that this particular product is not selling so well, are you willing to change your product mix so that you can sell better? All these things you have to keep in mind when you examine and re-examine your financial plan. So with regard to MSME, they have increased the revised classification. For micro, turnover is less than 5 crore, small turnover is less than 50 crores, and medium, the turnover is less than 250 crores. And for GST also, they have tweaked it from 2019. If it exceeds 40 lakhs only, you need to go for GST for the normal states. And if it exceeds 20 lakhs, it is for the special states. Okay. Special states are Jammu and Kashmir and Northeastern region. Okay, some student had asked me, how can I start businesses with small investment? Whenever you start any business with small investment, generally it will be service-oriented business. For that, you either have to have a professional degree or a skill. So these are some of the items I have listed where you can start business from your house or from a small shop, which are scalable with less minimum capital investment. Okay, what are some of the resources that you can go and check? First thing I advise all you students, please go to Startup India and just register yourself. You may not register your business, but you can still register yourself as a interested person and set alert. As an investor, as a business entrepreneur, as a consultant, there are many roles. So and you can even go inside the resources and set alerts. So whenever suppose you go and put a alert for a Ministry of Electronics, so if they are meaty, if they are having any startup challenge or they're having any scheme and they're giving grant, they will send to all the emails who have registered. So Startup India is a valuable resource to see all the Startup India schemes, and apart from the schemes, they have ongoing hackathons, competitions, awards where they give grant. They also tie up with international agencies and corporates in India like Mahindra Foundation, like HP and HCL, who come up with even this Mahindra and Ford, who come up for giving grant to selected awardee startups. Then there are alternative sources of crowdfunding. Best is to bootstrap as per me. Then venture capitalist and angel investment companies are there in India. We can do a session on how to do your pitch deck. So these are some of the resources. There is a format here for doing your financial plan, which I have shared. So that's all from my side. So now I'm free to take any questions.
Yes, from participant side, any questions? You can also type in the chat box if you wish to. Yeah, Mr. Mehta.
Let us say that we have got an idea and we don't have any initial seed funding for that. So do we need necessarily to make a prototype for that ideation?
Yeah, prototype. See, I have gone myself and judged also different hackathons, and minimum you need to show the prototype, and to give more credibility, if you have gone and even taken a feedback, no, you may not have actually got money. If you have shown the prototype and got certain feedback that we have used it and it is good, that also gives credibility. Because nobody will give only a business idea, nobody is going to fund you. If you are bootstrapping, then it's okay. But if you are not bootstrapping, then you have to have a prototype and collect customer data on that. And best is that if like a bookseller, I'll give you an example. How do booksellers do? They will say hot new book. How did we make it in our business? And they will sell the books. Pre-order the copy now. So many of the apps also do that. We are coming with this idea to make your financial plan. You just register and pre-order it. So that way you will have so many customers who have registered even before you have rolled out your prototype. So like these innovative ideas you can take to build credibility. Well, an entrepreneur goes much beyond a startup. A startup is just a word that shows that he's starting an enterprise. An entrepreneur is a visionary who stays and sustains and makes money from all of his business. Basically, he takes risks, pools the resources, and brings profit to the table. Yeah, Crunchbase gives you messages about startups and all that. Startup India is a very good resource. Crunchbase, yeah, it does give you information about who are the startup, who received angel funding and all that.
Any other questions from participants? So, ma'am, we have added all the registered participants in the WhatsApp group, as you might have seen. So, even after this session, if somebody wants to ask something, they can share in the group, and you can just respond to them.
Yeah. So there are two resources that I would like to share with them, sir, which I have given in the under the resource. So
Sure.
what I'll do is I'll just share the presentation to you. Certain slides I'll remove and I'll share it, sir. That's why I'm not sharing in the chat box. I'll send an email to you or maybe in the WhatsApp group.
No problem, madam. So once you give it to me, I'll circulate to all the participants.
Okay.
So participants, shall we close the session? In case you do not have any more queries.
Okay. Thank you for hearing.
So
Thank
once
you.
again, on behalf of Osmania Technology Business Incubator, Osmania University, we thank you, ma'am, for your time. And I'm sure all the students, innovators, and faculty members are now able to prepare their financial plans. So in case of any further assistance needed, we will reach out to you
Basically,
and take suggestions
I'm
and
very
help
serious.
from your experience and expertise. So once
Yes,
again, thank you so much, ma'am, and have a good day to all the participants.
But what to do? Being serious.
Thank you,
doesn't,
sir. Thank you to
bring
all the participants. Bye.
any good luck.